Q&A, and we'll do some practice together. Ladies and gentlemen, it's not going to be me keep on talking. You need to practice. From what I see just now is George already started using investing.com, practicing already. That is the way to do it, ladies and gentlemen. I can only do so much. I can only tell you. All right, so it's really up to you to go and apply it yourself. All right, so it's just like swimming. I can tell you your hand should like this, your head like that, then how you should float, all these things. But in the end, it still need you to jump into the water, drink some water, struggle. Drink water is like losing money in the stock market. Struggle a bit emotionally because some people with big ego, maybe they cannot accept losses. So you need to go through all this. It's just like learning how to swim, learning how to ride bicycle. You have to fall down, you have to get hurt, you have to have cuts. And until finally, after some trying, finally you'll be able to swim and then or to cycle. All right? So let me just go to my slides. Sorry, I need to share screen. Also, yesterday what I have gone through will be a principle behind TA. All right, and I've gone through P, which is price, volume, which is V, T is trend. All right, so for DD7 methodology, I have this so-called 7 component. I am going into each of the component. Like yesterday was PVT, today is PI, which is chart pattern and indicators. Next Saturday morning will be general market direction and risk management. And finally, next Sunday afternoon will be money management and mindset. All right. So at the end of it, I will piece everything together. So ladies and gentlemen, don't worry. We are just learning. At least yesterday, today, we are learning the so-called, and even next Saturday morning, we will be learning the 7 component. Each of them is just part of a jigsaw puzzle. Sometimes some of the questions you ask probably is, for example, maybe in under M or under risk management, or be patient, right? Because at the end of it, I'll put PVT, PIMR together, right? So that we can form a picture. All right, so be patient. All right, be patient. All right. So now let's do a recap of what happened yesterday. I mean, what I shared yesterday. Of course, price. Of course, I went through all this so-called candlestick price pattern with you guys. Let's do a very quick recap. Of course, we have the 1 candlestick pattern. This is what we call a hanging man. A hanging man actually will need to have a proud uptrend.
I don't have a formula for you.
All right, some of you guys ask some question. You guys ask me, how big should be the real body be? The body, that means the white square. All right. Also, my take is this. Can you see this lower shadow? Or it should be 2 times or bigger than that of the so-called the real body. The longer, the better, of course. Also, at least, please don't ask me, the length of the or the height of the area of the so-called the white body should be how much? Then I still have to think of the length and the breadth that give you the area. No, stock market cannot be so exact, ladies and gentlemen. Right? Yeah, it involves science, but it's not everything so exact down to decimal places because it deals with human being, it deals with emotion. For example, can you measure your greed? Oh, my greed today is 98 kg. No, right? All right. Or can you measure your fear? Oh, my fear today is 7 liter. No, right? Also, that's why, ladies and gentlemen, we can't be exact because each of us, we have our own thinking. And whatever we think we execute in the stock market, that's why you present a very diverse so-called results. All right. Also, but this is a guide that we can look at. Also, hanging man is something bearish. All right, and it looks like so-called hammer, but hammer is bullish. That means it's a proud uptrend need to be a downtrend. All right, and of course the lower shadow is 2 times that of the body.
What mercy you talking about?
All right, so another two one candle pattern is actually shooting star is bearish or is bearish. We need to have a proud uptrend. Ladies and gentlemen, all this chart pattern is for us to catch reversal. Is we don't see all this pattern within a range, then we say, oh, it's a hammer, it's a dark cloud cover. No, we need to have a proud downtrend or a proud uptrend so that we have something to reverse. Remember, candlestick is very good to catch reverse, all right? And it complements cycle analysis because cycle analysis is about timing and turning point, all right? Also, do take note of that. So shooting star is something bearish, all right? You need to have a proud uptrend, and the real body is at the lower end of the so-called the so-called upper tail or upper shoulder shadow. All right. Then on the other hand, something bullish is what we call inverted hammer. All right, and it occurs in a downtrend. All right. So, but ladies and gentlemen, one thing I want to mention is all the one candle one, the color of the body is not important. It can be white or black. Okay, again, black means bearish, white means bullish. And in some charting, like for example, investing.com, bullish is green color, bearish is red color. This for this region, then we go China, like what I say, China people, they like red. So when it's bullish or going up, it's red color. When it's coming down or bearish, it's green color. That's China, that's China. But outside of China, this is our universal so-called color of the so-called real body that we look at. All right. So now, this is the one candle. So now we go into the second two candle. So we have a bullish engulfing. That means the second candle, which need to be green or white, it need to engulf or cover up totally the previous day so-called candle or real body. And this happened after a proud downtrend. That's why it's bullish. Right? Then we have bearish engulfing. It's opposite of bullish engulfing. It happened at the end of a downtrend. I mean, at least you need to have a proud downtrend, and the bearish candle, second candle, will enclose the first so-called bullish candle. Sorry, just now I say again. I think I say wrongly. This is something bearish. That means we need to have a proud uptrend for bearish engulfing. Bullish engulfing, we need to have a proud downtrend. All right. So then we have dark cloud cover. That means the second candle have to eat into a part of the first candle's body. The best is more than half, but not totally enclosed. If totally engulfed, it will turn out to be what we call a bearish engulfing. Also, the difference between bullish, bearish engulfing, dark cloud cover, piercing pattern, bearish harami, bullish harami is all based on the length of the real body of the second candle. So you look at the engulfing the be bullish or bearish engulfing is the second candle always engulf the first candle. Or for dark cloud cover and piercing pattern, the second candle only eat into part. The best is more than half of the previous first candle. All right. Then for harami, which in Japanese means pregnant, that means the second candle is within so-called the length of the second candle, the real body is within so-called the first candle real body. That's why harami means pregnant. So if you look at it, it looks like a pregnant. This second candle look like a baby. Then the first candle is like a mother like that. All right. So this is for second two candle pattern. All right. Then for the three candle pattern, we have morning star and evening star. Morning star is of course like what the name suggests. It is something bullish. So we need to have three candle. The first red candle, then the so-called the star portion. Then we have the third candle, and the first and third candle. The first candle need to be so-called bearish. All right, so that and this third candle need to be bullish. So it actually signify a so-called a reversal. When I say reversal, ladies and gentlemen, it doesn't mean it's going to turn from an uptrend into a downtrend or from a downtrend into an uptrend. It's not necessary that it may be like that. Another scenario may be a stock has been going in an uptrend, then it display any of this pattern. That means let's say it has been going up in an uptrend. That means after it display all this pattern, it may hover a while. It may not reverse downward. It may hover a while, consolidate. There's a halt in the upward momentum. It will consolidate. Then probably after that, it may continue its proud up, the direction of the proud uptrend, or it may reverse. That is what I meant by reversal. All right, so do take note of that. Okay. So evening star. All right, so because it's bearish, so we need to have a proud uptrend. First candle need to be bullish. Then the star, so-called portion of the evening star. Then finally the third candle had to be bearish. Of course, the third candle, be it morning or evening star, if it's long and so-called and carve the first so-called the first candle, that will be even great. All right, but at least the first candle, I'm talking about morning star and evening star, they need to be either bullish, bearish or bullish, and the third candle need to be opposite of the first candle. Of course, if the star become a doji, that means the closing and opening price is the same, then we'll have a morning doji star as well as an evening doji star. So ladies and gentlemen, so this is a very quick recap, all right, of the price, the P portion. All right, like what I say, do not need to remember the name, not necessary, but understand the psychology behind each candle. That to me is more important. You understand? Also, please understand the psychology. Then along the way, as you get a hang of it, all these names, like for example, I say how I remember hanging man is you just imagine this is a head of a human being, then you put a rope around it, so it become a hanging man. So hammer is you treat it like a nail, then you cock. So that's how you remember it's hammer. Also, that's what I can share. So then, V, volume. All right, to have a strong uptrend, that means the price is going up, the volume is rising. We have a strong uptrend. All right, When the price is rising, volume is declining. That means the uptrend is weakening. All right, it may reverse. Reverse means it may turn to a downtrend, or it may hover a while to build a base before it continue to go up. All right, then the third one is price is declining, volume is rising. This is showing a strong downtrend. This is something negative. All right, and finally, when the price is declining, volume is declining. That means the downtrend is weakening. All right, the downtrend is weakening, and we may see the price reverse. Also, ladies and gentlemen, for DT7 methodology, I just want to say it's built on the foundation of price and volume. Right? To me, price is the most important. Volume is the second importance, only after price as a TA2. Later, because today I'll share about P and I, right? P is a chart pattern, I is indicator. I personally do not use a lot of indicators. To me, technical indicators is just to complement my so-called technical analysis. My entry exit is only based on break of support and break of resistance. Never crossing of the so-called, let's say, for example, moving average. All right. So all this later on, the second half of the today's course about the technical indicators are all 配角. 配角 means they complement the 主角. 主角is who? Price and volume. All right. Why do I say so? Because technical analysis, technical indicators, for example, MACD or moving average, all these are still based on the price of the stock or the asset classes. Also, we need to go to the root of the technical indicators, which is price. So the best form of technical analysis is actually look at know how to look at the price candle. Then second thing, look at the volume, understand their relationship. All right, that's why I keep on saying. Newbies, beginners, they only look at price only. Wow, go up $1, go down 50 cents. Wow, today I buy, go up one wholesale, this kind of thing. Because they are beginners, huh? But for more old bird one or veteran, they will tend to look at volume. But ladies and gentlemen, the really good traders or investors, they look at trend. Trend is the most important thing. I will only buy a uptrending stock or uptrending asset classes. I will never buy a downtrending stock or downtrending asset classes. I give you an example. Let's talk about taking an escalator. Think about it. Imagine an escalator coming down and you try to walk up a downcoming escalator. As compared, you go on an upgoing escalator. Which one is more so-called efficient to get to where you are? So that's why we only buy uptrending stocks. Buying uptrending stock is like going up a escalator. You try to buy a downtrending stock, it's like you go up a downcoming escalator. You probably can make money also, but you are more gangko, you are more so-called, how should I say, you need to put in more effort. Ladies and gentlemen, make money should be simple and easy. If you make money until very stressed, until you have to do a lot of work, then why so gangko? To me is. All right? Also, that's why I remember, ladies and gentlemen, follow the trend. I always say this, follow the trend. Trend is our friend. When it's going up, we buy. When it's coming down, we short. Simple as that. Or don't try to challenge. You say, I like challenge. I like to go for difficult trade. I know when you're more experienced, then you go for that. Ladies and gentlemen, I don't know about you guys. Why do you all want to participate in the so-called financial market? Can you all share with me in the chat? Why you all want to participate in the stock market or financial market or gold and silver? Why? What you all want to achieve? Can you all key into the chat box so that I know? Make money, yeah. So make money two way. Make money the difficult way or make money the easy way. You want easy or difficult? Can you all tell me? Easy or difficult? Easy, right? So if easy, then buy uptrending stock. Because why? Ladies and gentlemen, because stock market also obey the Newton first law. What's that? You all remember Newton first law? Also, DD7 is also we are also back with so-called science. It's not anything I pluck from the air, ladies and gentlemen. Newton first law say what? An object will stay in so-called will stay, or it is moving, will continue to move unless there's an external force acting on it. Correct? Anyway, you all can go and check it out. Newton first law. Let's say an object that's resting, it will continue to stay there because of gravity. It will, let's say it's moving, it will continue to move in that direction unless external force change it. Same thing, ladies and gentlemen. A stock will continue, an uptrend stock will continue to be uptrending unless there's an external force, like what? Like a bear market, like a poor earning, to change it. If not, the uptrending stock will still keep on going up. But along the way, it will take a rest. Same thing, a downtrending stock will keep on coming down because it obeys the first Newton first law. Unless suddenly, probably we go into a bull market, or the earning of the company turn from losses start to turn profitable. Also, that's why I say trend is very important. All right, so let me just go back to my slides. Wait, Okay, something I need to reiterate over here. Support and resistance is something very important in DT7. All right, support means imagine this a price. It comes to this support level, it will bounce off. This is what we meant by support. All right, resistance means it's like a ceiling. The price, as it goes up, it hit this ceiling or resistance, then it will come back down. Then I mentioned this yesterday. The previous high and low will act like resistance and support. All right, so we have a proud downtrend. It come down, then it bounce off. So it come down again, then it bounce off this. So it's very clear that this previous low, this is a low, right, will act as a support for this. So you can draw a support line. That's why it bounce on from here. Vice versa is the same for resistance. You understand what I'm saying? Also, but talk so much also no use. All these are just theory. Theory. So what we'll do right now is, I already say we are going to do a lot of practice. So because we have participants from Singapore, Malaysia, Indonesia, so we'll do 3 practice together. So y'all name me any stock from Singapore, Malaysia, Indonesia. Then we'll open up the chart and we will analyze based on PVT. Okay, so first, ladies and gentlemen, first, Singaporean, for Singaporean only, Singaporean. Key in a Singapore stock, then George, you choose one of it, then we look at the stock chart itself. Singaporean, choose a Singapore stock.
You want me to choose? I'm not sure which is a Singapore stock.
That's the whole thing. No,
Yes,
now it's all Singapore stock, so choose one.
What about Keppel REITs?
Okay. So let's. So this is investing.com. Keppel REIT. So now is, ladies and gentlemen, it's a time for us to practice PVT. So I turn into a candlestick. All right, so this is Keppel REITs. REITs is, I think you all know, right? Real Estate Investment Trust. So if we look at a longer term view, this is REITs. I mean Keppel REITs. If you all want to know which year is it, you look downwards, this 2015. Also, it's from 2015 until 2020. All right, so something very interesting, ladies and gentlemen. So then
You blow up like this. I try. I cannot.
we look at here. So can you see REITs supposed to be quite stable because they are income producing. People buy REITs is because they want income, because REITs either give every quarter or every half yearly dividend, and it's required, because it's in Singapore, it's required by our MAS to distribute 90% of the earning out. But because of COVID-19, the percentage has been reduced. Also, we can see this because of COVID-19. This is not a perfect so-called remember, now we practice already. Assuming this is red color, this candle, then this candle, this remain as green. So what candlestick pattern is this, ladies and gentlemen? Imagine this is red and this continue green. What is this pattern? Yeah, I see the answer. Correct? Morning star. All right, good. Let me go back. Also, of course, like what I said, it's not perfect, but if it's red, then this will be what we call a morning star. All right. So how can we draw a so-called trend line? You come to here, you click this, you have different choice, right? Then you click trend line. Ladies and gentlemen, drawing of trend line is both an art and a science. All right. The way you draw may be different from the way I draw. But the important thing is, we draw already cannot be I draw an uptrend, then you draw become a downtrend. So how I will draw a trend line is this. Probably like that. Because this act like a support, so I'll turn it to blue color. Now if I want to increase the thickness, it's like that. Then okay. So can you see? This is the high, This is a high, this is a high, this is the low, this is the low. All right. So we have a high, low, high, low, high, low. All right. So to draw an uptrend line, we connect the low. And another way we possibly can draw it maybe like that. Can you see? But it's still uptrend, right? You understand what I'm saying? All this you all need to practice. You see, I practiced 2 times, I made myself better already, actually. So you all need to go and practice. All right? And also, this is how we draw trend lines. Okay, another thing, probably I can show you all is this.
它这些是有意思的，它有意思的有 D 有 P， 它就是会跟你讲是。
Let's draw a horizontal line.
它会跟你讲的，其实这种是很，is a lesson 来的，它已经 incorporate 进去它的 software 了，很聪明。只是我们要一直 practice， 一直 try 哦。
We just focus here.
去 try 看对吗？这个 concept 对不对？
So can you see the price bounce up? It pull back, right? So this is a high, correct? So that's why the price went up. Remember, the previous high will act like resistance. So that's why it goes back up. It hit this. It doesn't continue to go up. It come down with a second candle. Why this previous high is going to be a resistance? Why? I explain. The price goes up. People bought it. People, let's say, bought around here. Then the price pull back. Then those who bought here lose money, right? Correct? Also, later on, then the price go back up again to where they enter. What do you think all these people bought here, they will do once the price go back to where they enter? What do you think you will do, ladies and gentlemen? Please key in the chat box so that I can understand, know what you all think.
他没有卖吗？他再掉回来，人再上去啊！哦，那赶紧买了啊！一些全部是 psychology 的。
Ladies and gentlemen, put yourself in their shoe. You bought here. You buy is to make money. Then someday after you buy already, it pull back down. Then you see, lose money. Then they hope. That's why I always say stock market is about greed and fear and hope. They hope it go back up. Hopefully can go back up. So finally it go back up to where they buy. So they will hang I better sell. At least I can break even. So that's why when they sell, it will act like a resistance. So that's why it has a pullback. But after that, because the buying enthusiasm of this stock is higher than the selling enthusiasm, that's why the stock break out. And then remember, yesterday I mentioned, whatever used to be a resistance, once it's broken through, it will reverse its role to be a support. So that's why it come down here, it touched this support, and it bounced. Can you see that? Also, this is a typical example. This is how we practice P, V, T. All right. So this is for Singapore. Come, let's look at a Malaysia stock. And you all name a Malaysia stock. Name a Malaysia stock. Then George, choose one.
Let's look at MyEG.
All right.
MYEG.
Yeah. So let's look at MyEG. One word.
Yeah, MYEG. One word.
Okay, so this is Malaysia stock. Also, I turn into candlestick. Ladies and gentlemen, one look just based on this. Can you tell me what trend is this? Trend only got 3 types, up, down, sideways. One look. Can you tell me what trend is this? Sideways, right? So will we want to buy a sideways stock? Yes or no? No. We only buy an uptrending stock. Correct? Because you enter here, let's say you enter tomorrow, my EG, I don't know, you enter here, it may sideways for another 1 month, 2 months, 3 months, then your money stuck inside for 1, 2 months, 3 months. You are not making a maximum use of your capital. Remember, time is more precious than money. Money we lose already, we can always make back. Right? But once we lose the time, I don't think we can make back. Can we go back to yesterday or last week? Impossible, right? Also, that's why we only buy uptrending stock. All right? So this is my EG, how it looks like. Well, there's a big gap here, probably some company action. All right? So one thing I can see is this. If I want to draw a uptrend line, I'll connect the low, correct? Oh, sorry. Yeah. If you want to remove something, can you see there's a dustbin here? You go and click, then it will disappear. So you draw again. This is how I draw my uptrend line. Okay? Ladies and gentlemen, sometimes you have gap one. We just try to feed the, remember I mentioned yesterday, the trend line need to be as is significant if it is touched as many times as possible. For this case, it's touched 1 time, 2 times, 3 times. All right. So this one, it doesn't touch. All right, it's okay. But generally, we are saying why we are doing a draw trend line. One thing is to show us it's an uptrend. Another way we can see whether it's an uptrend or not is by looking at moving average. Example. So over here, if you want to add, can you see indicators? Then personally, I use more of a simple moving average. There are 2 types of moving average. One is called simple moving average. One is called exponential moving average. Exponential moving average, short form is EMA. That means it takes give more weightage of the more recent data. Simple moving average, let's say a 5-day. That means it takes the average of the 5-day. It doesn't give equal weighting. All right, so let's say you want moving average, you can MOV. Can you see? Average. Because I have 4 months, remember? 5-day, 20-day, 50-day, 200-day. So I click 4 times. Then I go and adjust. So my first one is actually 5-day. So I can change to 5. I want to use black color. So I increase the thickness of the 5-day. Probably y'all cannot see.
Very serious about it.
Let me zoom in, then y'all can see more clearly. Can you see? Okay, let me finish the rest. 20-day, I use green. $20. Then 50-day. Blue. Finally, red color for 200-day. right? So as you all can see,
大家影射这个 MA 啊，
this black line here closer to the price candle is the 5-day. Green color is the 20-day. Blue color is the 50-day, which represent 1 quarter, and 200-day, the red color is for 1 year. All right. So now, ladies and gentlemen, so this is how, may I remember my trend line? I turn it to blue color. I can increase the weightage. So this is my uptrend line. Okay. I don't know what happened here. Something must have happened over here because the volume is crazy. Remember yesterday, I mentioned whenever I see extremely high volume, that means something probably will have happened. I don't know what is it. I can only base my analysis on what I see on the chart. All right. So, ladies and gentlemen, so my EG is actually sideways. Ayo, then let it sideways for some time. Don't waste your time, can or not? Can? All right. Next, we go Indonesia. So, Josh, can your Indonesian? Can you choose an Indonesia stock?
I've never seen this before, so let's go with it. MDKA.
MDKA.
Yeah.
Merdeka Copper Gold. Probably should be rallying recently. Yes. Ladies and gentlemen, use investing.com because it's free. Of course, you can use your own broking house chart. It's free. And actually, nowadays, chart is so, all this charting is easily available freely. Don't really need to go and pay for it. All right. So because it did go and copper, that's why it has been turning up. All right. And it's a very nice uptrending stock. Something happened here. Also, yeah, let's take a look. There is a proud uptrend. Then there's a green candle. There's a red candle. Can y'all tell me what pattern is this?
没有嘛，这个是 uptrend， so 它下来嘛， so 这是 dark cloud
Yes,
cover，
dark cloud cover.
Yeah.
That's why it pulled back a bit down. Right? So, ladies and gentlemen, over here, here's some uptrend,
对，
a very short one. Can y'all tell me what these two
那到
candle pattern is called?
影响好像没有
Very good. Bearish engulfing.
variation，
Hey, how come got evening star one?
这个你说这两个
Wait, how come got harami?
啊
Again, proud uptrend.
，proud uptrend 这个啦，
This candle is engulfing this.
variation 而已，
No. So it's no. Harami is like that. Wait.
这把类，这把类，
Let me draw, ladies and gentlemen. Harami
一定要是黑色。如果是上的话，它
it
应该
need to be within the real body. That's why it's a pregnant lady. All right. So let's go back to the chart. You tobalek already. Now this baby is at the buttock of the pregnant woman. It should be here if it's a harami. Also, this is actually all right, because it has a bit of proud uptrend. So this is to me a bearish engulfing. Okay. Can so let's see any more things we can see from here. Okay, one thing, ladies and gentlemen, can you see as the price comes down, the volume is increasing? Can you all see that? Is this something bullish or bearish? Can you all tell me?
Price down, volume high, bearish. Strong downtrend.
Bearish, right? Because a better one will be not so bearish, will be at least the price come down, the volume never pick up. Agree or not? What I foresee is like that. What I foresee is like that, which is what I'm going to cover after this already, the chart pattern. We may. Let me turn to a blue color. This is what we call a neckline. We may possibly see a head and shoulder. This is the left shoulder. This is the head. So now it goes up, then we probably see a bearish engulfing. If it come down and break below this blue line here is what we call a neckline. At this point, we cannot say it is a head and shoulder. We cannot say. We can only say that it is in the process of forming a possible head and shoulder. It's only when the price come down and break below this neckline, then this will complete a head and shoulder. Once a head and shoulder, the neckline broken, most likely the price will drop. Can, especially when it break this support, if the volume pick up some more, I think that is very bearish already. Can. Also later on, I'm going to talk about head and shoulder. Don't worry. Also, you just think of it as a human being. This is a left shoulder, this is a head. Then it's now possibly forming, because based on this so-called bearish engulfing, the price may come down, right? And if it break this blue neckline, it will then complete a right shoulder, and the overall will complete a head and shoulder chart pattern. Okay. Also, so I think this is a very good practice for stocks, be it in Singapore, Malaysia, or Indonesia. All right. So with that, ladies and gentlemen, I think we have done enough practice as well as revision. So today, now I will go through our so-called the P&I for today, which is price pattern and indicators. All right, this is what we are going to cover. Of course, the first half will be chart pattern. Second half will be indicators. All right, so let's start. All right, but before we start, I just want to share something. This is something, what I want to share is, this is really how the stock market operates. Also, whatever share now, ladies and gentlemen, because we will be recording it for those who can't attend today's session. But for George, Connie, and Victoria, whatever record today, this portion that I'm sharing now, we cannot show it to the public end.
Okay, noted.
This is how the stock market really works. If you really think that stock market is based on earning, now I'm telling you the real stuff, what is happening. All right? So please pay attention. All right? All right. So let's. This whole thing is what we call Operation M. Okay. So this Operation M, Operation M, it will involve 10 personnel. Anyway, whatever I say, I really simplify it and is only for illustration purpose. But it has some truth inside. Also, this Operation M will involve 10 personnel. Right? One of them is so-called the person in charge of the operation. The other 9 is all taking order from this operation guy. I mean the head. All right? So let me draw some lines. So so there's this guy. So he has another 1, 2, 3, 4, 5, 6, 7, 8, 9% under him. This is not MLM, don't worry. All right. So this guy and this all 9 of them, I mean 10 of them, they embark on is this thing called Operation so-called M. Also, what they do is they go and analyze the market out there. And after doing all the technical analysis, fundamental analysis, they narrow down to one stock. Fundamentally very good one. All right. They even go and talk to the management team, all this thing. Let's say this stock is actually called Stock M. Stock M. Okay. So for this Stock M, ladies and gentlemen, you know, company when they become listed, they issue shares, right? So the assuming the number of share the number of hey George, if I want to draw something, I have to choose any of. I cannot just draw that, man.
You want to type or you want to draw lines?
Draw line.
There's an option for draw lines at the top.
No, just now how I draw the. Yes, sir. No, just now remember how I draw the real body. How do I draw it?
I can't see the function right now from my side.
Okay, then I erased the whole thing already. So let me try to draw again. I'm not very familiar in using. Yeah, let me try out. Can you all see what I'm drawing?
Right now it's blank, but I can see what you're drawing.
That's not how I draw the real body one. I want to have a freestyle to write things.
You just need to choose the correct tool.
But just now I never choose anything. Never mind lah. It's okay. Okay. How come got this yellow color? Okay, I draw again. 1, 2, 3, 4, 5, 6, 7, 8, 9, including him. This will be operation M. Also, ladies and gentlemen, so then the stock itself is called stock M. All right. So assuming this stock M, they issue, let's say, 20 million shares. 20 million shares. All right. And the directors, CEO, founders, whatever, they hold on to 10 million. That means there will be 10 million out there floating. That means this 10 million, it can be bought by you and me. This is what we call, that means 20 million is the total number of shares outstanding, that means issued. Then 10 million, because 50% is floating, so, which is 10 million, that means you and me, we can buy the 10 million, while another 10 million is being held by the management team, directors, which will never sell. Okay? So now, ladies and gentlemen, so this guy, which is the Mr. M, all right, he will, so what happened is this. For this operation M, simple term, they have 10 million for this whole operation M. Also, within the 10 million, 6 million, the objective of this operation M is to target this stock M, is to buy up 6 million worth of the outstanding number of shares. So that at the end of it, after the 6 million, they can sort of like control or corner the so-called the shares. 6 out of 10 million, you are controlling more than half, you know. But to control so many shares, it will take time. And this is their budget, 10 million. So this guy, Mr. M, will give out of the 10 million, he will give each of the 6 of them, 1, 2, 3, 4, 5, 6. These 6 of them are the operation guy. Each of them will take 1 million. 1 million. 1 million. 1 million. 1 million. And 1 million. So these 6 persons are the operation guy. So their job is to go and buy the stock of stock M to corner 6 million of the stock. Hey, how do I draw? I need to draw. Why now cannot draw already?
You just need to pick the tool for you to draw the freehand line. There's a lot of tool options at the top. I can't see the same tool, so I can't advise you which tool is it.
Oh, okay. Can. Now I know already. Also, what they'll do is Mr. M tell the 6 of them, give them each of them 1 million, tell them, go and buy stock M between the price of, now we all use US dollar, between the price of $1 and let's say 80 cents. All right. So these 6 of them, because they are operational guy, so with the 1 million each, every day or every few days, they'll go and buy a bit of this stock M. So they every day buy or every few days buy, then blah, 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 buy. Because remember, their objective is to accumulate 6 million. Also, it will take probably 2 months, 3 months, a few months, or even 1 year. So until finally, they have accumulated 6 million shares. They already hit their objective. Remember, they have a 10 million budget. They already used up 6 million, right? Still got 4 million budget, right? So these 3 guys will each be given also 1 million. 1 million. 1 million. Yeah, 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. So then these 2 guys, so you see after let's say 1 year, assuming 1 year they already corner 6 million of the share, use up the so-called 6 million, right? Then these 2 guys, ladies and gentlemen, is the marketing guy. Hey, ladies and gentlemen, this is a business. These 2 guys is the marketing guy. This guy is what we call the CEO, Chief Entertainment Officer. All right. So now after they have accumulated 6 million share, all right, it has sort of like formed this kind of chart pattern. So now, ladies and gentlemen, is to start their second phase 2 of their Operation M. This is where these 2 guys, marketing guy, will come into the picture. Assuming this stock is at $1, assuming so there's a bid, there's a bid and ask price, correct? Bid and ask price. Sorry, ask price. All these you all should know already when you are trading the stock, right? So assuming the bid now is $1, the ask price is 1.01. Remember, now they have 6 million, they corner 6 million out of the 10 million stock floating out there in the market. So that means in their hand, they have a lot of stock. But remember, they still got 4 million, correct? 4 million. All right. So what will they do? 1, 2, 3, 4, 5, 6. Also, this 2 guys will then start to do marketing because they each of them got 1 million, so they have 2 million, right? So then they have a lot of stock, right? So what they do is they take the stock that they have, they put at the ask price. Then these 2 guys start to do marketing. What do? They take the money, go and buy up whatever how many lots is there. They go and buy up. So then the price will then jump to 1.01 for us, a bid. Then the next one will jump, the ask will jump to 1.02, correct? Or then these 2 guys will continue go and buy up 102. They put more at 102. Then this whole process, then the price keep on going up to 103. Like here, it already formed the base already, right? So this is $1. So it goes up from $1, 101, 102, 103, 104. Can you see they are doing it among themselves? Why? Because they corner the stock and they got budget for marketing. So once they start to push the price up, ladies and gentlemen, this stock will start to appear in the top volume, top percentage rise in the stock market, right? So what do you think the retail investor will do? Can you all tell me? Once they see the stock price keep on going up, retail investor, wow, $1 already, oh, 1, 2, 3, they will be lure in, go and buy, correct? Also, they'll be lure in to go and buy. So along the way, as it goes to 1 point, anyway, just to let you all know, this Operation M, they have a target to sell this stock M at, to release all their 6 million share at $5. So their objective very clear. We corner 6 million share, we buy between $1.80, our target sell at $5. Also, they push it up along the way, ladies and gentlemen. As the price goes up, a lot of retail investors start to come in. They will start to dump their 6 million share to all these retail investors. Then later on, they probably will even try something. Because they have a lot of share, they go and sell it in the market to push the price down. Once the price start to turn down, then a lot of retail investors, they see already, the price doesn't go up, start to turn down already. What do you think the so-called retail investors they will do? When they see the stock price start to drop, what do you think they will do? They will sell, right? So they will sell. Remember, they use up 6 million, they got 2 million. Then this guy, don't forget this chief entertainment officer. Along the way, he'll go and drink coffee or have entertainment activities with some influencer who can probably help to push up the stock price. All right, so that's why along the way, you'll start to see, financial, there will be reports coming out. This price, this stock's target can go up to $3. Lure more retail investor in. Then, okay, let's come back to here. They purposely force the price down so that as a retail investor sell, they can go and buy some more. Then after that, once the weekend is all shaken, right, they then continue to then do this whole operation again, push the stock price up, then lure more retail investor come in. Then along the way, there will be influencer like some gurus or all this, that the chief entertainment officer got 1 million, belanja them to good food, whatever, ask them to talk a bit about this stock, let's goreng together. Then along the way, some of the broking house will come and report, wow, this one should go up to $4. Then it keep on pushing the price up and up and up and up and up and up until $5. But along the way, ladies and gentlemen, this whole Operation M, this two guy, all right, this whole team, along the way as the price is being pushed upward, what do you think they are doing? Ladies and gentlemen, all right, so they are selling to all these retail investors who just go in blindly because they read the financial report, they feed the so-called report from a broking house. Wow, can go up to $4. Wow, buy. They listen to their father, mother, relative, go buy vegetable. Everyone also saw, this stock M can only go up, cannot come down. Go and buy. So everyone rushing to buy. Also, ladies and gentlemen, let me go back to my board. So that's why finally, they push the price up until $5 and by then they probably will have unloaded all their 6 million. Think about it. They start with, they make $4, correct? $1 to $5, they make $4, 400 times. So that means they make they have 10 million, or they make 40 million. 40 million, 10 of them, each of them make 4 million. After this whole exercise, each become a multi-millionaire. Ladies and gentlemen, this is the real stock market. All right. Also, if they want, they can continue this process all over again. But what I'm trying to tell you is, ladies and gentlemen, whatever these guys do, they will leave track behind on the stock chart. And a very important way to recognize this is you must learn how to recognize chart pattern base. And ladies and gentlemen, a very good example of this operation M is, let me introduce to you guys, in Malaysia, one of it is called Top Glove. So can you see, ladies and gentlemen, this stock has been accumulation. Remember, Operation M, they have been accumulating for quite some time already. That's why there's this chart pattern. This is what we call saucer with handle. Then after that, once they accumulated the 6 million, remember? Then the two marketing guy come in together with chief entertainment officer. They use the remaining of the budget, go and do M&A to push the price up. Then a lot of retail investors go and buy. Then do you realize along the way, a lot of broking house start to come out. Wow, Top Glove target $100 wall. All right, because the chief entertainment officer has done his job. Until finally, probably around their $5. I mean, example, they will all exit, and along the way, this operation M and these 10 guys will make from $1 to $5. They make 400% profit, while the retail investor go in and chase. And those who chase at the tail end, too bad, they hold on to the crying baby. Also, ladies and gentlemen, this is the real stock market, because the number of shares being issued is fixed. And the number of shares floating out there in the public for trading is, like for this case, probably only half. Then once someone with this kind of mind and I mean this stock M operation mindset, and they have the money, they can so-called manipulate the stock price. I'm not saying this is what actually happening in so-called Top Glove. Top Glove come at a good time because of COVID-19, because the team was right. But you can see, if you know how to read chart pattern, all the signs are there already. It's just a matter of time it's going to be pushed up. Whether is it over, I don't know yet. Probably this Operation M $5 is not hit yet. I don't know. All right, but this is precisely how a stock will move up, how a stock is being manipulated or cornered. And this is how stock market works. Ladies and gentlemen, if you just base on earning, yes, over a long time, that means more than 1 year, or probably the earning will affect the stock performance. But the short and intermediate term, that means 1 month, less than 1 month, or 1 month, or less than 1 year, this is the kind of things that's going behind, that's pushing the stock price, be it up or down. This is what is truly is happening. And that's why learning how to read chart pattern is very important. All right. Also with that, ladies and gentlemen, also please, this part is only for DD7 members only. We are not going to share with the public out there. Also with this background, ladies and gentlemen, let me go to our so-called textbook today, for today. So what I'm going to go through now will be chart pattern. Also, remember, let me just go back to the drawing board again. This is what we call accumulation. This accumulation is displayed on the chart through the building of base. Like what? Like cup with handle, saucer with handle, double bottom, rectangle, or flat base. And this is what I'm going to cover right now, ladies and gentlemen. So once you understand this, ladies and gentlemen, you are going to make a lot of money, because now you really understand how the stock market actually operate. Also, this first chart pattern I personally love a lot because it has made me a lot of money, is this chart pattern called cut with handle. Cut with handle, yes. All right. Throughout my 21 years, I'm glad that I know this chart pattern called cup and handle, because it really made me a lot of money. So let me go back to the drawing board again. Let me clear all this. Also, ladies and gentlemen, all this chart pattern, you need a bit of imagination. But once you know the template, this template is in your mind, so that next time whenever you open up a chart, you can look at chart very fast. You look, then finally maybe this chart pattern fits into their template. Then you know, this is the one already. So for this cup with handle, ladies and gentlemen, this is how a cup and handle look like. First, you have a proud uptrend. Cup, you will form a cup. All right, then you will form a handle. It's basically a cup with a handle. You look from a cross-sectional view. This is a cup. This is a handle. So this is the resistance line. So once it break above this resistance line, once it break above this resistance line, ladies and gentlemen, it's going to go higher. So this is the cup, this is the handle. All right? Can just remember this template: cup, handle, cup, handle. So that next you read a lot of chart until this pattern form. Then so that next time, once this, whenever you open a chart, the chart pattern fit into your template of cup and handle, you know this is it already. All right. So now with this, let me go back to my PDF. Also, ladies and gentlemen, remember proud uptrend. This is the cup. This is the handle. Also, what is the criteria of the cup and handle? First, it need to have a proud uptrend. Remember, we only want to buy uptrending stock, right? Correct? So that's why it's going through a proud uptrend, then it's building. This is a form of a base. Remember the operation M example between $1.80, they are accumulating the stock. This is a form of accumulation. That's why I can tell you what the smart money is doing, the institution is doing, whatever they do, they cannot hide one, because whatever they do is displayed in the price chart. All right, so the first criteria, it has a proud trend. Then the depth of the so-called the cup should be between 15 to 30%. That means the depth of the cup. The depth of the cup of 15 to 30% is good. Don't let it go to, if it's 50% or more, it's not so good. Why? Example, assuming here is $1. Let's say it dropped to, let's say 60, it dropped 60%. That means it will drop to 50, drop 50%, drop to 50 cents. for it to go back up, 50 cents go back to $1, you need 100%, right? For a stock to go up 100% in the stock market is really not easy, correct or not? Also, that's why the depth of the cup, 15 to 30% is good enough. 50% or more is a bit too drastic. Also, 15 to 30 is good enough. But sometimes in a very severe bear market, it may be 40 to 50%. But in normal time, 15 to 30% is good enough. Or as a general rule, look for stock that held up relatively well during market correction. That means it doesn't drop so much, 15 to 30%, don't drop 40, 50, 60, that one too deep already, all right? So that's the second criteria. Then the third criteria is the base length. Is about, I'm talking about stocks, at least 2 months. That means this whole process, at least 2 months. 1 month is a bit short. Remember the operation M? The operation M, they need to corner 6 million. Do you think they can do it within 6 months? Within 1 month? Not so fast, right? Also, that's why we need to have at least 2 months. Or y'all can go and read all this. I'm just telling y'all the important point. So it's better to have a U shape rather than a V shape. For example, this is a U shape. V shape means V like that. So U shape will be more gradual. The whole objective of having this is to shake out the weak holder so that the so-called the operation M guy can go and buy. Remember? All right, they can go accumulate. All right, then we come to the handle part. Handle part. First, very important. The handle should, this is the handle. The handle, it should be as close to the resistance as possible. Or the handle should not be probably in the middle of the cup or even lower than the middle of the cup. The handle should be as close to the resistance here as possible. Let me draw this. Let's come to the drawing board. The handle should be, this is a handle, right? It should be as close to this resistance as possible. That means the handle cannot be here in the lower half of the cup. Or it should be as close as possible. Okay? And the pullback to form the handle, generally you take about 1 to 2 weeks. All right? The depth of the handle should be 10 to 12%. It cannot be too deep also because the whole objective of the handle is to shake out the weak holder so that whoever left behind, that means they are not shaken already. They are prepared to hold the stock and even see the stock go higher. All right, so do take note of this, all right? Can, then the ideal time to buy the stock is when it breaks up above the peak in the handle. All right, so let me just go back to the drawing board. That means this is the handle. So once the price start to break up above the handle, the most we chase is 2%. But let's say $1. Let's say the handle is $1, resistance is $1. We will buy at 101. We try not to chase more than 2% already. Cannot. Also, there may be. Let me draw another possible cup and handle for you all to see. Let's say there's a proud uptrend. Then there's a cup. Then it formed the handle here. Remember? Okay. Remember the previous high here will be a resistance, remember, like what I mentioned earlier? Also, can you see if the handle is too far away, the price breakout, it may still hit a resistance here and pull back. So that's why I say a better handle should be, it should be as close. Wait, it should be, the handle should be as close to this resistance here as possible. So that once it break out, or we buy the point of breakout. If the handle is too far away from this resistance, it may just hit the resistance here and then pull back again. And once it break out, we try to buy beyond, between 2% of the breakout. Let's say the resistance is $1, we buy 101, as close to $1 as possible. All right. So let me go back to my slides. Also, I will show you the ideal buy range, 2% above the pit handle. For best result, buy as close to the ideal buy point as possible. And ladies and gentlemen, very important, when during the day of breakout, the volume should increase at least 40% above average. Remember the price and volume relationship. When the price go up, breakout, the volume should pick up. This is very important. All right. Also, please remember this template. This template should be in your mind so that next time whenever you open a chart, I can tell you, whenever I open up a chart, within 1 second, I can see this, whether it has a cup handle or any chart pattern. Why? Not because I'm good, because I read a lot of chart already. So you have to keep on practicing until like that. Can? Also, now I've given you all the template already. So this is a template of cup and handle. Let me give you all an example. So can you all see there's a proud uptrend? Then there's a cup. Then can you see there's the handle is here? It's almost back to the high here. Can you see this is the reason? So when the price break out, that's where we buy. And can you see when it break out, the volume increase. So this is what we call a cup with handle. This is a very lucrative base. I cannot say it's 100%, but the probability to me is probably like maybe 70 to 80%, which is very high already. There may be time that cup and handle doesn't work out. Example, it may break out, but suddenly, example, there's a 911, the whole stock market crash, and this doesn't work. Or maybe it break out in a bear market. Also, it may not work. But in normal time, once it forms a good cup with handle and it break out with increased volume, we should see good rally from there. This is a US stock, very famous grill to eat grilled meat in US. Okay, so let me give you another example of cup with handle. So proud uptrend, we form the cup. The resistance is about 125. Can you see the red color line? So it dropped to about 85. So it's about 30%, right? It never dropped 50% because 50% should be about 60. It only dropped to about 85. Also a good debt. then it recover. Then can you see it form a handle? Then it break out with increased volume. Then it's voila. And it obey this 20-day moving average. Not obey, it follow this 20-day moving average very closely. So this is cup with handle. Also remember, cup handle, at least 2 months. Remember all the criteria. Can? So another example is called Tencent, Tengxun, which is listed in the Hong Kong Stock Exchange. All right. Can you see there's a cup? Ladies and gentlemen, sometimes you need a bit of imagination. Really, I can only tell you the shape is like that. Is you all need to go and really read a lot of chart until you can observe whether. I think this is very clear. It's a cup, right? And can you see this is a handle? Then that's why it broke out with increased volume, and then it continued to go up. Same thing, cup, handle, break up, go up. Cup, handle, break up, up. Can? Also, this is my personal favorite. I make a lot of money from cup with handle. Okay, so this is the first one. So let me just go back to a drawing board. Remember the operation M? When we bought it between $1.80 when the operation M, that range is what we call the cup. For this case, cup and handle. Then we have other like double bottom, rectangle, all this thing. And that's why I say learning how to read chart pattern is very important. All right, so next I will proceed to the next chart pattern. It's called saucer with handle. Saucer with handle is just another version of cup and handle. It's just that the depth of the saucer is less than the depth of the cup. Because saucer is flat one, cup is, you need to put water. So saucer is flat. That's why, can you see? We have a proud uptrend. Then we have a saucer. That means the depth of the saucer probably is as little as possible. It could be 5%, 10%. Definitely not the 15 to 30% like the cup and handle. All right, that's why you say is a saucer with handle is similar to cup with handle, except the saucer part tend to be stretched out also a longer period of time, and the depth is less, of 5% or 10%. All right, so it formed the saucer, it formed the handle. Then once it break out, ladies and gentlemen, remember the price volume so-called combination. Once we see the price goes up, volume pick up. This is good. All right. So example, of course, is our dear Top Glove, which I show you all the operation M. Can you see? We have a very long saucer. Handle and break out. And when you break out, look at the volume. So I can tell, ladies and gentlemen, I don't know whoever the institution, smart money, whatever, before that, I don't think they know about COVID-19. But anyway, they have been doing the accumulation. Or just that, that's why I say timing is everything. When the timing is right, we just happen to have COVID-19 and the team is right, the environment is right, then the marketing guy, remember the two guys that do marketing and the chief entertainment officer all do their work. That's why they push the stock price of the Top Glove up. It is not accident, no, ladies and gentlemen. All this is pre-planned. All right, and all this pre-planned work, you can actually see in the price chart if you know how to read it. Because that's what I always say. Whatever the big boys, the smart money, whatever they do,
you leave some trace on the chart. This is a price.
They will not run away from the chart itself. They will display footprint behind. That's why reading chart is very important. Okay? So this is saucer with handle. Next, we have double bottom. Okay. Since we talk about double bottom, I need to go to the wait, maybe I just draw the saucer with handle. Saucer with handle, that means it's like that. Saucer. Then we have the resistance here. Sorry, should be up a bit. This is a saucer. Then it form the handle. Then it break up. That's where we will buy when it break out. And when it break out, we need to see volume. Picking up very high. The more trading volume, the better it is. Also, this is saucer and handle, all right? So now let me go to double bottom. Double bottom is basically a W, opposite of McDonald. McDonald is M. Also, the best for double bottom is have a pro uptrend. Then it has one leg down. Then it goes back up. But it cannot break this high here. It form another leg down. The best is if the second leg down can be lower than the first leg. Why? It's better. So that whoever bought here, how should I say? When it come down here, whoever bought here, it come down already, right? They never sell along the way, it come down, right? It cut below it. The people here, oh yeah, it's going below my buy price, quickly sell already. Because they miss selling here. Also, when you undercut the first leg down, is better. It will shake out the weak holder. So finally, all the weak holder is shaken out. Then the strong holder come back in and push it up. This is what we call a W. And the point of entry is when the price break above this. When it break up, when the price break out above this high, we will same thing. Don't chase more than 2% beyond the breakout price, and we go below. We should see volume picking up. That means whenever there's a breakout, we want to see volume very high compared to previous day's volume. Also, this is what we call double bottom. All right. So just remember this template now. You just remember a W can already. All right. So let's go back. So can you see double bottom is like a lopsided W. We have a prior trend. This is the first leg. And the came down. The best it can undercut the first leg. The best lah. Then it turn back up. Once it break above the pit in the middle of the W, it will be a buy point. All right, and the ideal buying range is up to 2% above the. Let's say here is $1, so that means we should buy at 101, 102. Don't go beyond 102 because 2% ma. So don't go 103, 104, 105. The best is buy as close as possible. All right. Another thing I want to share is this. Anyway, y'all can go and read the criteria. You know, a prior trend. The base, that means is 40% or less. We just think through psychology, ladies and gentlemen. The price drop, then it goes back up. Then it has to drop again because it doesn't break out, it drop again. Also, ladies and gentlemen, it dropped 2 times. Also, really later on when it can, let's say, undercut this low, then it goes back, it can really break above this. That means, wow, this chart pattern is really strong. And we should expect the price to continue to move up. Also, the depth of the double bottom, 40% or less. Same thing, the base building need to be at least 2 months. For stocks, at least 2 months. Because accumulation, like what I say, need time. Right? Pit in the middle of the W should form in the upper half of the base and should not be below the left hand. It should be below the left hand side of the pit. That means what? That means this pit in the middle of the W, it cannot be low here. That means it should be in the top part. That means it should go up to here, as close to this as possible. Alright, let me draw easier. So this is a prior trend. So this is the first leg down. Then it goes up. It should be as close to this as possible. Then it come down. Hopefully undercut this low. Then it has enough strength to go up. Once it can break this resistance, break out, and when it break out, we should see very strong volume. That will be an ideal so-called double bottom. A not so ideal one probably to me is like that. Uptrend, pull back, then the peak like that. Then it drop back down. Even though it may break the high of this, but can you see, even though it can break up, but the thing is once it go back up to here, there's a resistance here already. Can you see? So it may just touch this, face resistance, then it pull back. Also, that's why this is not a very good double bottom. The best type is like that, go up, come down, the peak close to this high, then come back down, then you can, then this is the resistance. If we can then break out, with increased volume. That'll be good. That's a perfect textbook double bottom. All right. So let me go back.
Textbook. Not the real line. Real line, you need to try it out.
Yeah. So this is double bottom. All the criteria I've just explained already. Sorry, there's a mistake here. It should be 2%. All right, don't worry. Each of day you receive a textbook. At the end of it, once you clear all the 4 sessions, you'll receive a full one. That means 4 of them will combine together. I apologize for this mistake. It should be 2. All right, and when you break out, ladies and gentlemen, it should be the volume of breakout should be 40 to 50% above average.
Not because we need the textbook.
So this example, solar wind in US. Can you see first leg down, up, down, up. So once it break up, can you see there's a increase in volume? That'll be good and continue to turn up. One thing I will say is this: it's possible for double bottom to have a handle, possible, but not always. It's possible. Just like the handle in cup with handle, saucer with handle, it's possible to have a handle in double bottom, but it's rare lah. I would say it's rare. Okay, so another example of double bottom is this: Microsoft in US. So can you see there's a proud uptrend? There's a first leg down, and this first leg down just touch is 200-day moving average. Can you see? So remember, 20-day, moving average, be it 5-day, 20-day, 50-day, 200-day, can act like both support or resistance. All right. So remember earlier I draw the uptrend line is one straight line, right? We all just think that let's say this 200-day moving average is a dynamic or fluid uptrend line, not straight line. That means because some part is curving, is changing. All right, so can you see the price touch the 200-day moving average? It goes back up. Can you see? This is very close to the peak here. Then it came back down. Also about the same position as the first leg. Then after that, it start to go up. Then it break up, and voila, ladies and gentlemen, it has been following the 50-day moving average quite nicely. Also, this is double bottom, ladies and gentlemen. All right. So the next chart pattern is what we call flat base or rectangle. Same thing. We have a proud uptrend. Then the price will oscillate between here. This flat base or rectangle often occurs after a stock have formed a cup with handle or double bottom. That means what? That means, let's go back to the cup with handle. That means cup with handle, then the price breakout, right? Then it may form a flat base or rectangle before it break out and go higher. or we go to a double bottom. We form a double bottom, the price break out, then it form a flat base or rectangle before it break out and go higher. That's why flat base can occurs after so-called a stock form, a cup with handle, or double bottom. But there are times that before, there are also times whereby they do not have a proud cup with handle and double bottom, or may not. All right. But the important thing for us to take note is this: is oscillating between a resistance and support. All right. And to me, the more the depth, the more narrow the depth, the better it is. If it's too wide, like 50%, 60% is not good. Because remember, I already say you drop 50%, you need 100% of graph, it's no good. Probably maybe the best is maybe 5, 10, 15%. It just hover between the so-called support resistance. Then once it start to break up, same thing, we try to buy within 2% when it start to break up above this resistance. So like, that's why it says here, it has a milder decline than cup with handle and double bottom. And the time frame is shorter as compared to double bottom or cup with handle, but minimum 5 weeks. That means in this case, the flat base or rectangle, that means the stock is taking a break. Or then it break out, then it go higher. Of course, it may break down above, break down below the so-called the support. Then this may be a candidate for short sell. Now we are talking about break up, not break down. There's a chance that the flat base, then it may break down, break below the so-called the support. So let's say the support is $1. Once it break, maybe when you reach 1 bit below, let's say 0.995 or 0.99, that's where we can short. Okay? Can So let me go through some examples. Also, this is a criteria of rectangle or flat base. Same thing, proud uptrend. Can you see 15% or less? The depth or the length of the base at least 5 weeks. Ideal buy range is up to 2% above the resistance. And same thing on the day of breakout, we want to see big volume. Ladies and gentlemen, I'm just giving you a gauge of 40 to 50%. Next time, you all don't go until you see there's a flat base already. Then you go and measure the volume compared to the previous day or the previous days. Then you tell me, Eric, only 30%. So this one not considered, is it? No, the important thing is on the breakout, we should see higher volume compared to previous days. The best, of course, is 40 to 50%, but the important thing is it must be higher so that when it break out, remember, ladies and gentlemen, breakout, that means this is the point of least resistance. We want to buy when there is least resistance. We don't want to buy when there's a lot of resistance. We want to buy when there's not much of an ejection, which is this case. This is a point of least resistance, double bottom. This is the point of least resistance. Cup with handle. When break above the handle, that is the point of least resistance. That is the point where we want to buy, where there is the minimum resistance. All right? So flat base or rectangle. Ladies and gentlemen, all this chart pattern not only apply to stocks, it can be applied to maybe a currency pair. It can be applied to gold. It can apply to silver, commodities, any financial asset classes. All right. So let's look at one example of flat base. Can you see the flat base hover between this support and resistance? Also, finally, when it break out, the volume pick up. Also, next time, ladies and gentlemen, you see something flat like that, you should be very excited. Or you see something like a cut and handle, or you see a W, you should be very excited because you know maybe something is coming already. Can not? All right. So that's flat base. Let's look through another example. This is Unilever in Indonesia. Can you see Unilever Indonesia oscillate between the support and resistance? Finally, when it break out, look at the volume compared to the previous days, and voila, it's on its way up. I can tell you, all this chart pattern happen in Indonesia, in US, in Hong Kong, in Singapore, everywhere. The important thing is you must know how to recognize all this chart pattern. Okay? So next we have double top. All right? Double top is the opposite of double bottom. Let me draw for you all to see. Let's clear this. So remember, double bottom is W, right? Double top is opposite. Already say it's double top already, ma. So it's the opposite of W. That means it's an M. That means it has a proud uptrend. Then it's an M. Then once it breaks this support, because you see the price goes up, comes down, finds support at here, then it bounces back up, then it comes back down. Once it breaks this support, then it's coming down. All right? So this is a template of a double top. So let me go back to my slides. So can you see? A double top. Then this is the support. So once it breaks down, it continues to go lower. Of course, the best is when it breaks down, the volume increase. So once it breaks this support, that's the best time for us to do short sell. Okay, so all these chart pattern also apply to, for example, this is KLCI. It also apply to indexes as well. All right. So, ladies and gentlemen, can you see the index comes down? Found a support, that's why it goes up. Why is this a support? Because it used to be a resistance here. Remember, price goes up, hit the resistance, come down. Once it break the resistance, this resistance to what? Reverse its role as a support. So now you become a support. That's why it come down, touch this support.